This conference will now be recorded.
Okay, you should be fine.
All right. Okay. So some of you I heard are just starting, correct? Just 1 year, and then some in 2 years, some are 10 years in the business. Okay. So how many of you have like rental properties? Ooh, quite a few. Okay. How many of you are planning to buy rental properties in the future? Oh, there's more. All right. So then there's a difference with just being, just like now you're an agent, right? So once you start buying properties, you become an investor, right? There is a great advantage for you guys that you don't know, that some people cannot even use because they are not licensed real estate investors or realtors. So we're going to go over, okay. Oh, oops, sorry.
With authority, push it with authority.
All right, with authority. It is working.
Oh, I'm
Yeah.
sorry. Let me do, it's not on the big screen. So let me fix that. Okay, should be fine. I'll just wait for a moment. Yeah,
All right.
well, let's just go for that.
Okay. So let's see. All right. I think most of you would agree that it is not what we make, right? But it is what we keep. Even if you make $1 million, if you spend $1.1 million, you're going to be in the negative, right? Unless there is a purpose why you want to be negative, right? Because you're probably planning to lower your taxes and you reinvested the money. So it's really not bad for some reason, okay? For something that it makes sense. All right, so let's start with number one. That's why I'm here today, okay? See your accountant before tax season. When you're new, it doesn't really mean I don't have much yet, right? But you gotta know where you're at. You gotta know your spouse's income, because most of the time those income will be combined together. And when we prepare your taxes, you probably are just starting, but you missed out on declaring some expenses. And if you missed out on expenses because you're new, you're thinking, oh, it's not a write-off, then you did not declare. Well, you cannot use that expenses in 2022 for next year. So you basically lost it, okay? But if you declared it this year and you end up with a loss and you didn't use it, you still have at least an operating loss that you can carry forward for 2023 when your income is amazing, spectacular with Frank, right, in 2023, okay? So number two, set up your business structure for tax efficiency. So when you're starting, everybody here is a 1099 with the XP, correct? Okay. Once you hit a certain threshold, it depends on your, again, your income plus your spouse's income if you are married. There will be a time when you need to create your entity to help you on self-employment taxes. What that means is maybe we create an LLC, we convert that to an S corporation so that you get rid of the self-employment tax. So you don't want to wait too long, because sometimes if you are single or if you're married, the threshold is different. So we're here. If you have any questions, just, you know, we provide free consulting. Okay, don't think, oh, I'm not making enough, but then you don't want to be surprised either. Number three. Yeah, it's the business structure.
Okay, I'm back.
So that's why we have to restructure sometimes, right? We set up the structure, and then what makes sense as you move up, you know, like S corporation, or when is the time to become a corporation, or switch back to us an S corporation. So that was number two. No problem. So number three, time is money. Value your time and be organized. Anybody done with their taxes for 2021? Yeah, done? Do you know at our office, we still have clients that we're trying to complete for October 17 tax deadline. One reason is that they are very disorganized. Okay. So, you know, when you're disorganized, I think Frankie would agree, time is money, right? The more organized you are, the happier you are for next year. So when you're starting and you probably think, oh, I'm just going to use my personal credit card. I'm going to use my personal bank account for all my expenses. Just to help you guys get more organized next year, you can open a separate bank account or use a separate credit card. You don't have to open a separate credit card, but use those just for your business. Okay, so that you do not need to get a QuickBooks for now, maybe later. Okay, so that would help you save on your QuickBooks for now. But at least when you pull those credit card statements at the end of the year, then you know all of these are my business expenses. We also have an Excel spreadsheet for those who need help with organizing. Just you can email me. I have my business card. I can give those to you later. Frank has my contact as well. We have a spreadsheet that is you can use by month. Okay, to help you complete your expenses for the whole year. So that come January, at least you're ready. Okay, and also the IRS does not like commingling funds from your personal accounts, okay, and your business account. So when you're starting, it's okay. But just you have more transactions, just be prepared to have a separate bank account for your business and a separate bank account or a credit card for your business. Number 4, so purchase big ticket items to offset high income years. Is anybody planning to buy a vehicle? A vehicle this year, all right? Or an RV or a plane. Okay, Frank. So cruise ship, we have to make it reasonable enough to where maybe if you take the Abby agent, so you can justify, right? So you can justify, okay? So really a plane is not, it's not outrageous. If you can show and you can prove to the IRS why it is expensible. Because if you need it, you can even have a pilot to fly you to attend a meeting in Florida, California. So there is what you call a bonus depreciation if you're trying to, just as an example, right? So if you're planning on buying like a very expensive printer, a very expensive, or a vehicle before the end of the year, you can apply a bonus depreciation, which is 100% of the cost of the vehicle. So if you're planning on buying, say, a $50,000 vehicle, we can apply 100% of that, as long as the vehicle is used 51% for business. And then next year, it goes down to 80% bonus depreciation. So for example, what's his name? I forgot now. Justin. What type of vehicle are you looking to buy? Aha. Are you 1099 or W-2?
Well, actually, he's a Jackson Henry lender, he's W-2.
He's W-2 now. Oh, okay, everybody's converted to W-2. Okay. But if you have a 1099 business on the side, or just like you ladies, if you're, or even a boat, for example, right? You're wanting to show a property by the lake, and you bought up a boat so that the buyer can see what it looks like from the lake, like Lake Travis in Austin, right? So you can actually buy a secondhand boat, and that will be an expense. Okay, so even if you paid 1 month at the end of, say, in December, we can apply a bonus depreciation to offset your income for 2022. So if in doubt, you know, you're buying certain like vehicle or big ticket items, let me know. We can help you with that.
Andrew, do they have to be a certain expense, like on a vehicle, or a certain weight, or a certain class? Or can it be any vehicle?
As long as it is not a Lamborghini, outrageous. If it is reasonable, right? There are different rules of expensing. So if you're buying a truck or you're buying a luxury vehicle, we can apply different types of depreciation expense. So if you are planning on buying a truck that weighs let me know, because sometimes it depends on what you're trying to accomplish. So there's certain bonus depreciation that would not apply to certain vehicles. Correct. And also there is leasing. There's no bonus depreciation for a lease because we can only expense the lease. So if you bought it in December, that's all your expense is 1 month. But if you finance, then you technically own it even if it is not fully paid for, right? So there's a difference between leasing and financing. It's not a problem to depreciate, correct? And you can still add your gas, your repairs and maintenance, tolls, parking, car wash. All right. Any other questions before I move on to number 5? So this is like a huge tax reduction. You're looking for like a $30,000 outright expense in December. Okay, fund retirement accounts. There's so many ways that you can fund your retirement accounts depending on your business structure, or even if your business is not a business entity as of yet. So for example, you're a sole proprietor, you do not have an LLC yet, you do not have an S corporation yet, you can still do, say, a SEP IRA, right? There are other retirement accounts that we can help with that can help lower your taxes, but instead of giving all the money to the IRS, you give it back in the form of a retirement for yourself. So I can see different age range here. Everybody full-time realtor or part-time? Full-time? Part-time. Oh, I know you. He's the client. Marcus. Good to see you, Marcus. Yes. So even if you're part-time or full-time, a part-time meaning you may have a W-2 job. You get a 401k, which you may or may not participate with at your company. If you're full-time in this business, who's responsible for your retirement? Yourself, right? You are responsible for your retirement. At the office, other CPA firms use us actually as a consultant for their clients because they cannot provide the retirement planning part of their, when they do their tax planning, they cannot provide the retirement planning because they don't have the license. So, which is understandable. There's so many things that we guys need to factor in when it comes to retirement, not just investments, but your long-term care, right? Health is wealth. You need to make sure that you're properly protected. For example, if you have a 401k and the money or doubled tomorrow, let's just say you have 401k. No? Okay. You have an IRA. You have an IRA? Not yet. Okay. So if, for example, you just invested in a $6,000 Roth IRA, right? The maximum for 1 year. And the market did so well and it doubled. So now you say, wow, 100% return, that's rare, right? But you said, oh, it's amazing. but then you do not have life insurance or long-term care, something happened to you. Okay. Your beneficiary will receive out of your IRA $12,000. You have kids? Okay. 12,000. You had even a basic term life with living benefit rider. You had, let's just say, in addition to your IRA, you bought a life insurance. Let's say you have $500,000 of death benefit. Your daughter will get the 500,000, right? Or what if, so isn't that better than the $12,000? 500,000 versus $12,000, right? You have a daughter, you're still building, you have mortgage, we have other debt, you know what? And so we need to make sure that when we are building wealth, that we take a more comprehensive approach of what we have, not just focus on the investments, because what is to say that 10 years from today, our tax bracket will go up, right? I don't know, sir, if you remember, but during World War II, the tax bracket is really, really high, right? Today, the highest is what, 37%, but then before it was like 70%, 60, 70, it was very high. So people are not making enough money and then they are taxed at 70%. So if all of your investments now, if you take it from, say, you take a distribution at age 72 and a half, imagine what taxes would mean on your gains, right? So we need to make sure that we are diversified. We have proper protection before we move on to investment. Okay, any questions regarding number 5?
Are life insurance disbursements still tax deductible to your beneficiaries?
To a life insurance disbursements, meaning the death benefit,
Yes.
it is not.
Oh, they changed it.
It is no, it has never. It's not taxable.
Right. So it,
Yes.
it is. It's going to be tax free.
Yes. It is tax free. It is tax free. Yes.
Okay.
It is tax free. But there's also other life insurance to where it builds cash value, to where if you take it out as a distribution when you get older, the distributions you take out from your cash value life insurance is tax free as well. And as it is growing, it is also tax defer. I mean, you're not paying you're not paying taxes on the interest. Okay. So tax free, everything is tax free, and you can borrow out of the policy for any reason. Maybe you want to buy a second home. Maybe you want to travel. And also for life insurance, you can actually designate a trust to be the beneficiary of the policy. So you can structure a life insurance to where one can be just like Larry. Larry has a lot of projects in Africa, right? So if he wants to get a life insurance to where a charity or a foundation will be the death benefit, he can do that. And then he can also open another one. But if you have a business, the business also can pay for it. So a lot of it's called executive bonus section 162A. So a lot of tax preparers, actually, they don't know about that. And so I do a lot of workshops regarding executive bonus 162A.
So do they need a corporate structure in order to claim an expense like that?
Correct. They will need an S corporation or a corporation, not an LLC. But if you have an LLC, you can employ anybody, like relative or anybody, as long as you have an EIN, you can get the life insurance for them. And you can select any employee to get to provide that life insurance. But for an IRA, a SEP IRA, you have to offer to all employees. So that's the difference with life insurance, is you can select maybe your key person, yeah, or a spouse. executive bonus, section 162A. It's an IRS approved, yeah, yeah. Yes. A lot of CPAs, when they meet with me for tax planning for their clients, and I introduce it to them, I give the provision, the Internal Revenue Code, and I tell them to Google. And so when they see, they're like, "Oh, she's not joking. It's legal," because they don't know. Yes. A lot of CPAs don't know. I'm sorry?
Well, executive bonus 162A.
Inter IRC 162A. Woo, you guys are getting smart. Because even other, yeah, a lot of tax preparers and other CPAs that I know, we actually have one here. I'm going to visit her. She has a client. She's a CPA across the street, and I help their clients too with that. So our firm actually were on the top 10% in the entire country where we are rare.
You are what?
Rare. It's like a hybrid of a CPA firm and a financial advisor. So I had to study all of this, and I had to take like 6 months to understand advanced tax planning. So we can do for employer, for example, if the income is too high, there's what you call a cash balance plan, a defined benefit plan, in addition to the executive bonus. So if the income is higher, the cash balance plan would be better if the goal of the business owner is just to really maximize their retirement and lower their net income, because they can contribute up to $250,000 of their retirement, including a separate amount for the spouse. So if you have that great problem, let me know, okay? Don't be shy. All right, so number 6. Let me see here. The weekend sandwich rule. So you have to take your CE, is that provided by EXP?
Sometimes.
The paid, okay. But sometimes you have to travel out of state?
Within the state.
Within the state. So if you are wanting to complete your CEs, whether in state or out of state, there's what you call a weekend sandwich rule. So where it allows you to expense, maybe not 100% of your travel costs, but maybe half, right? With your family, if you follow the weekend sandwich rule. Well, number 1 rule is that if you are going to, say, Colorado, you need to identify a training or a seminar that you have to attend, okay? You cannot just fly to Colorado and say, okay, let me find a seminar. You're already there, right? It needs to be planned ahead, okay? We need to be able to tell the IRS, that you're going to attend a seminar. It's about real estate. You're buying properties, and you say you want to learn more about investment. And so you need to identify first. You cannot do it when you are there. So, for example, you got there on a Friday, okay, and the meeting is on a Monday. So what happens between Saturday and Sunday? You have probably brought your kids, right? You went to do something personal, but you had to eat, you had to stay at the hotel. There's certain expenses that you can expense and consider it as a business expense. Now, if you bought something personal for yourself, of course, that's not business expense, but at least your hotel, we can expense at least a portion of those, while at least your kids are traveling with you or your family, right? So make it more like a business and personal together, but
So,
maximize.
Andrea, would it qualify if they called ahead and set appointments with a couple of real estate agents with the intent of establishing a referral relationship?
Yes.
Because that way you don't have to wait on a seminar in Estes Park. You can call ahead and set up the appointments and basically go interview.
Because then that would also qualify as marketing, networking, client building, building relationships with either your clients or anybody that you want to partner with. Travel expenses is always 100%.
You have a documentation trail, right?
Yes. Yeah.
So you set it up in advance, take pictures and post it on Facebook while you're there.
Yes, because it's time-stamped. Yes.
Yeah, so if you're challenged, you're able to show that it's legit.
Yeah. Yeah. So it is the time when you have to post on social media to have that proof. Yeah. So, ladies and gentlemen, you are all blessed that you're business owners. There's so many ways that you can deduct. A lot of like your home office and such, but okay, I don't want to jump into that. Okay, investment properties. So this is where you're really blessed even more because you have a distinct professional license. So a doctor, for example, cannot buy investment properties and take the same write-off as you guys, because as a licensed realtor, if you go and invest in properties, what that means is that the losses you incur from those rental properties is ordinary, meaning it can offset your spouse's W-2 income. Whereas a doctor, for example, if he buys, well, let's not go there. But if you want to find out more as you buy properties and you want to understand what is the taxation for investors, or when you are buying and flipping, okay, we can have a one-on-one. Okay, because there's different taxation when it comes to buying and flipping and rental properties. Buy and hold, because that's more long-term. But some people do both. So it's more complicated, right? Because you want a shorter return on your investment, you do the buy and flip. So number 8, Roth IRA for kids. This is also, some CPAs don't know about this. They're very scared to use this. But how many of you take your kids, or they help you at the house, they shred, they and some 15-year-old who want to drop mommy, when you have an open house and such, right? But don't you give them allowance out of your own money, out of your own pocket? So this is the time when you can expense your kids or even your spouse. So be smart, right? But if you don't want to give them cash, you can open a Roth IRA, and it will be an expense for your business as well.
Is there an lower age limit, like our 4-year-old, is she qualified right there?
From what I heard from different organizations and estate attorneys, I hear the most common is 7 years old. So as long as it is appropriate, right? You don't want the 7-year-old to be counting money, right? Because they should not be given that responsibility, but they can shred, they can open your envelope letters, they can organize for you, they can, whatever it is that you want your 7-year-old to help you with.
How old is that, Henry?
7 years old.
I see, yes, it's so wobbly and, you know. Yes. I was going to say the same thing. We have a dentist client. Yes.
Oh, you can? It's not just children?
It doesn't have to be your child. No? No. Can be your grandkids. From the business, because it's a write-off from the business as an expense. Yeah. Correct. No, this is what it doesn't matter. It can even be a section 529. Yeah, so it can even be a 529. Where, yeah, so some people have like different opinions, but I'm just stating that you know, an IRA or a 529.
You can do a 529 box.
It has educational purposes only, correct? Yeah. For the spouse, you mean for IRA? There are other ways that you can maximize your write-off if it is a spouse. Yes. You can pay them different ways. So if you want, get I'll give you my business card, because it's everybody's different, right? Your goals and so how you pay your spouse, we have to take a look at what's most important to you guys. And if the other person have 401k from his job, or does he have other businesses, or is he a W-2? Because we don't want to increase the self-employment tax. So there's different ways, but you can. So a spouse is very flexible. And you do not have to have a business entity for a spouse. It matters only when it is for you, for the executive bonus. But you can have your own SEP IRA as well, if your business is profitable, if it's positive. All right. So I guess it's a combination of 8 and 9. Employ your relatives, right? Your kids, your grandkids. Help them out, but help them save and lower your taxes. So some people are very scared to put in or write other expenses when they're new, because they're thinking it's like I'm just doing this for love, or I'm building my I'm building my reputation, you know. So they would travel and do other things to improve themselves. Like you guys are coming here today to learn, right? So Frank is here. Don't forget that your business mileage counts. So number 10 is I can make this list like really long. But to summarize, if you're not sure if it is an expense, we have an Excel spreadsheet for that, that I can share, okay? So make sure to keep up with your mileage. When you're traveling to visit, like for example, investment properties, some people forget that it's their mileage, right? And they take their kids with them, or their spouses are driving with them. So you see how it's like, oh, I can pay my husband for him driving me all around town. But wait, he can get something out of it in the form of a retirement, and it lowers my taxes, right? So we gotta be smart. So, oh, ladies who loves purses. Uh-huh. Yeah. Yes, I was gonna say, we call that a work briefcase. It's like purse, it's big, right? So that is a work briefcase. So if you have receipt for that, that's expense. Oh, then you gotta buy another one. Okay. Yes. So even a backpack, right? Backpack. I carry my brochures with me and my laptop, so I have different types of briefcase and laptop. I mean backpack with me. So those are also expensive. Personal cell phones. Ooh, who wants to buy a new cell phone? Don't forget, okay? And you gotta do it before the end of the year. And of course, a portion of your bill, right, on your cell phone. So make sure to prorate your business cell phone. Real estate apps, you have plenty. Probably some are provided by EXP. But if you buy something on your own, right, don't forget that those are also expensible. If you do something out of EXP that it's out of your pocket, right? You're building your profile, you're doing social media. Those are all expenses, right? Even photo shoots. Okay, your photo shoots, you're wanting a great picture, right? You probably need what? Quite a few for different multiple, right? Those are expensible. Okay. Now, if you buy a suit to go on, say you had you're doing a presentation. Unfortunately, those are not expensive. Okay. Even if it's $1,000 for a pair of suit, it's not expensible. Unless you consider it a uniform. I don't see how I could consider this my uniform. That logo, if anything branded, that is expensible. Okay. So if you have your own team, like Team Charisma, and you bought shirts for your team, right? Then those are expensible. If it is branded.
So Frank should have deductible and mine is not.
Correct.
Your name? I got good advice.
So like all the SOG, Jackson Henry. So like if that's a logo. Yeah, like okay, Kevin Minor's team. What is the home run team, right? So if they have the home run team T-shirts, baseball caps, anything branded, those are all expensive. Okay, so as you build your team, don't forget those are all expensive.
So Jack Nichols picked the deductions.
Yes. Reasonable client gifts. Some realtors forget also, when you close a home and you give them a thank you gift, for buying from me, those are all your expenses. When you're showcasing a property and you paid somebody to probably stage or like do the design, those are also expensible. And when the time comes where you get a van and you have rental like furniture, right? The van also is an expense for you because you store like furniture or anything that you need to showcase a property. If you hire a landscaper to fix the property before you sell it, that's also your expense. Oh, who likes beer? Beer. Free beer. You like wine? No? You love wine? Whiskey. Okay. Okay, alcohol in general, right? So when you have open houses and you know you brought a wine, a beer, a champagne, those are expensible as well. Okay, anything that you do for your open house, giveaways. So as you build your team, don't forget these are all expensible. All right. Okay. So before we end, wanted to end this with the way to get started is to quit talking and begin doing. All right, do not procrastinate. Okay, by the time you know it, it will be December 29. Okay. Don't procrastinate. By the time you know it, it will be almost the end of the year. Okay. So, well, thank you so much, guys, for giving me an opportunity to present. I don't know if that is big enough. Oh, it is big enough. So, here is, thank you. You have my email. This is the phone number at the office. We are currently working on a new website. But the old one should be still up and running. We are rebranding. We're going to be focusing and advertising more about comprehensive financial solutions. And so we're hiring to accommodate all of you guys. Thank you, Frank.
All right. Thank you, Andrea. Appreciate it.
All right.
One more time. Hey guys, let me remind you of 2 more classes that we have going on this week. Wednesday morning, 9 a.m., new agent ICU. Who knows what ICU stands for? Intensive Care Unit. We specifically put a new agent class on the calendar this fall because we know that if you're a new licensee, you need a higher level of care. You need closer hands-on support. And so top agents in our company are taking one of these weeks and teaching you in their areas of specialization. And so this Wednesday is going to be Cheryl Vecchio teaching on KB Core. Last week it was one of our home run team members teaching on open houses, and I'm Stacy Russell. Yes, thank you. So those are excellent, excellent classes, and we're going to be bolting on driving tours after those classes. I don't know if we have them on the calendar yet, but we're going to be going out to new home communities, touring different neighborhoods, so you can get familiar with inventory as well. Those classes are open to all agents. So tomorrow you might like, well, I've been in the business 10 years, but I really don't understand KB Core. You need to be here. Okay, come and participate in that. And then on Thursday at 10 a.m., we have Stephanie Garrett and Heather Murley teaching Sky Slope. And everybody wants, did somebody say no? No? Oh, okay, that was an amen. Okay, all right. So Sky Slope Thursday, if you have not been putting in transactions, you're in for a shocker if you get a transaction and you try to put it in for the first time without knowing what you're doing. Yes, I'm speaking from experience. I'm the guy who does about 1 transaction a year, and I'm like, it's like trying to relearn it every time. So so come to this class, get your templates all set up, get your profile set up, so that when you have a transaction, you'll be able to focus on your client and not go into panic mode about the admin side and the paperwork side. Okay. I see smoke coming from the deck. Oh, yes, Shanna. Oh, nice. Hey, Shanna, what's your email address? There you go. And you have a business card in your office if that was too much to remember. Okay. All right. Yeah. Yeah. Bill, is busted. Okay. Hey, Kevin has already fired up the grill. We've got burgers and hot dogs and sausages and all kinds of cool stuff. We're going to throw it on here. We'll be serving the anything that goes on a hot dog bun in about 10 minutes. The burgers will take about 15 minutes. There's also a cooler full of sodas in the kitchen, and then boxes and boxes of potato chips and maybe a random cookie or cupcake. Okay, so if y'all can stick around a few minutes, have lunch with us, and then you're free to do whatever you want this afternoon. All right, thanks guys, appreciate you being here. My pleasure.